All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for May 2nd, 2023. We'll start with the swing portfolio on 30 minutes. This is hybrid swing trading, starting with Alcoa. As usual, this is all 30-minute charts. Greens are where we're buying, reds are where we're selling. These red boxes are risks. The black box is the start of the trade, the exit of the trade. We're using a modified form of the PSAR, the Dragon, the color-coded by season RL10, and the RL30, and the MACD histogram to give us the seasonality. The yellow box represents today's price action, high and low, and a clear box to see tomorrow's yellow zone. And the blue box is the last 5 days. This is the daily moves marked off by that thin. So you can see the 5-day high was here. The 5-day low was, I think, there. Okay, so that's how we read this stuff. So Alcoa has been through just like a sine wave. We tried along, it gapped against us. So we had to exit. We stopped in reverse, got our money back. Here's the PSAR flip. SSC with 2 positions. Standard exit when this breaks down below on the gap down today. Shorted. Standard risk box. That's the same as this one and that one based on statistics. 1/10 of a range stat, which is the maximum reasonable intraday move. And this sold off harshly. Stabilized, the R10 rolled over. We took the exit as we usually do right at the edge of the Dragon and made +1 and no overnight risk. Alcoa. Standard work. I'll take that one every day. Boring. This is AI. This is an AI company. We tried a long yesterday. It closed well. Today it gapped down, started selling off. So we were just able to scratch for 0. And that became a stop and reverse because the Dragon had rolled over. The 30 had rolled over. This is essentially an owl entry. And it went down through the through the fall. Became winter right here, but then couldn't go any further. When it came back up, we took that for +1. Then when it rolled over in the last hour, I elected to take that as a re-enter the short for a swing. And that's because we were below this whole critical zone right here. And it was closing weekly. So I take that now as resistance on the way up. And I'm interested in that thing getting smashed. Caterpillar. We were flat yesterday. Missed the short opportunity. Not the first time we'll say that today. Come on. Get my pen to work here. There we go. And so we had a nice 2-position short, stop and reverse, 2 positions long, got really well paid inside this whole channel. And then it rolled over, collapsed, and missed that one. It bottomed out, found support. This one made it all the way across the river through the PSAR. Great American company. Took the standard short. It closed well. So we're holding +1 going into tomorrow. We'll see. I have hopes that it can get to 220. If it gets north of there, it has a chance to get to 224. If it gets through there, it has a chance to make a new 10-day high at 226. So I like it. I would not think of being short of this one until it were to break below, say, 211. And then it has to be the best idea for going short. I just don't like shorting Caterpillar. Great American company. Cliff Natural Resources. So we banked this win. Yesterday was flat. It collapsed. I missed the short. Bottoms out at a 10 and 30-day low. Crossed the dragon, hit the PSAR flip, standard entry. It moved up smartly and then started to stabilize, and I said, you know what? Let's just take 2 and go home. CVS, this was a long yesterday that we cashed here. And that was a case where, once again, I wanted to make +1 and have no overnight risk, and I'm glad I did because it gapped down to here, actually to here, rose up and sold off. So instead of +1, we'd have turned that into a -1.5 if we'd have held that overnight at a place where it had already failed once hard before. So we had no overnight risk, saw the gap, saw it selling off. The market was weak, standard risk. 1, 2, 3, edge of the dragon, standard exit, 1, 2, 3, +3, no overnight risk, and happy. Happy as a clam, which doesn't make a lot of sense if you think about it. All right, next up, Dish Network. This was a gap down on a collapse well below this entire turnaround region. Gap was here, sold off smartly, so just took the standard risk, same as this one, sold off, started to recover in the same place it recovered before, just took the exit for 0.5, no hurries. Devon Energy, love this one. Supported Spring Crossing, crushed it for 1, 2, 3, 4, 5. The next day, didn't have the will to trade it, didn't have a pattern. Today it gapped down to here, started to sell off, took the short, standard risk. It sold off 1, 2, 3. It actually went to probably 5. I wanted to stay in it as long as I could, and I let it get to the PSAR, so I gave back 2. Cashed 3, and then did a stop and reverse here with markets money. So we're looking for that to close the gap and get to this tomorrow. So we'll see. Energy as a whole found some support today after a sell-off. Electronic Arts. So here's one that we made a little bank on, decided no overnight risk, therefore missed all of that pain and suffering. On this one, a couple days ago, on the rollover, we got short, cashed it. Got long on the COTA 2, cashed it yesterday. Today it gapped down, started selling off, so took the standard risk. It sold off harshly. I took the exit here, and now here's your quiz for the night. Taking a look at that pattern, you could say this is probably a double bottom. You could say that the channel, it looks something like that. And so now if you were to put a standard risk on this, which is that size of this risk, and you have an opportunity to make maybe 3R to the top, do you take that one near the close and have that as overnight risk? What would you do? Is that a legitimate frame? Time, will, pattern, money. Is there time left in the day to take that? Yeah, I got an hour to think about it. Yeah, the Fed's talking tomorrow. I don't know that that has much to do with EA. If this was a big, broad, large cap that, trades, strongly with the market, maybe. But that's an issue. This was a risk I didn't need to take, and I felt like if this continues tomorrow, there's an orderly move. So I noticed it and just didn't take it. Well, it shouldn't be overly strong. In fact, the fact that it's weak, the fact that it has held 3 times at this price level, this time it went from here to there, here. It went from here to there, and so now it's recovered. It could get to there, and if that breaks, then there's no resistance there. It gets back to here pretty darn fast. But it does have a lot of resistance to get through, so that feels like, at most, this was a 2-hour trade. So no burning urgency. So no trade for me. This is emerging markets, and this too is in an oscillating pattern. Notice it made a double bottom here, and you could almost think of that as a delayed Kata 2. Last time it was here, it went to there. So when it sold off here and started recovering, I probably should have taken it here, but I was mindful that it might do this. And I was happy to take this. And remember, now I've got 2 positions on this because I took the second position here. We were holding this as an owl entry and a PSAR flip and standard risk. So at this moment, we're holding 1, 2, 3, 4, 5 on this one, 2 on that one. So right here, we can bank 7R, and is there any hurry to... No. Tomorrow, this is a big fat index. It will flow north if it's going to. Ethereum. This is the one that I blew yesterday. I was supposed to have exited somewhere in here yesterday, but span of control, I just missed it, and it sold off. And so yesterday I let a +1 go to -3. Today it gapped up. I was ready to sell, but it gapped up a little bit and started moving, and I said, you know what? 1, 2, 3 exit, or 1, 2, 3 entry. Let's just take it here. It went through and closed really well. So this one is now back at +1, and then this one is +2. So good things can happen to bad people, and that was played as poorly as I have played one lately. That was just a huge error, but I was in the zero state and ready to go, and you just go on. You take your lumps. Mexico. Nice big move over the last 3 days. Today it sold off a little bit, stabilized, crossed the dragon, PSAR flip, standard risk, long one. Brazil, massive. 2 positions long that paid off. Yesterday it rolled over, so we took the PSAR flip. Today it broke below the collapsing dragon, so I added a second one, and then it dropped like a stone. Added a third position, sold off, bottomed out, gave it as much time, and cashed. So this one is about +1. This one is about +2. And that one is about +3. So that's about 6R and no overnight risk, and ready to get back in if it fails tomorrow, but also ready to trade it on the long side if we get a PSAR flip and it starts to go. So nice as you could please. Intel yesterday initiated the short on the collapsing dragon. It closed poorly. Today it continued to sell off and then stabilized. I wanted to get out of this one so bad, but didn't. Decided to just hold one position. We're at +3. If it starts to work tomorrow, I should be able to salvage 2 out of the 3. But if it starts failing tomorrow below 29.76, I'll get in an early short prior to the Fed, and then clear the entire deck before the Fed announcement. I still feel vulnerable on that one. IP, we started yesterday on the RLXD, which is like a caught a 2 off of this lower highs. And today it started selling off. I gave it plenty of room to the PSAR, and that risk was so tight, and the fact that we did not have a second one on, if I'd put a second position here, I probably would have had to get out earlier. I wanted to give it extra time to fail again. So I just kept one position on, and then that one paid off. 1, 2, 3, 4. So +4 in international paper. IYR. This was yesterday's stop and reverse, tight risk. Today it collapsed further, second position, sold off harshly, took it all right here. Man, just as orderly a trade as you want. +6 on this one, +3 on that one. That's +9 on real estate. And it sold off right to the level that you would expect. And then tomorrow, could it do that? It sure could. Lather, rinse, and repeat. Like a sine wave. KRE. So bank failures in the headlines everywhere. So yesterday, after this nice little SSC recovery and exit, and then stop and reverse here, and it closed with 3R in hand. We kept that one. Today it started selling off. The headlines on the Dredge report was second largest bank failure in history, and this started to collapse. So I put, now don't do this at home, I put 3 positions on with a tight risk, and so now I've got 4 short, and now I get out of those 3 here because I want to keep 1, so I'm still short 1. But this was a pure turbo trade. The turbo trade was 1, 2, 3, 4, 5R on 3 positions is 15R. And this one is 1, 2, 3, 4, 5, 6, 7 in hand. Feels pretty good. We'll see if the Fed says anything tomorrow that salvages the banks, but man, oh man, that was any good. So McDonald's, you will recall, we also played that one as a special. It's worth going back to revisit. The big 3, added another 3 positions at the close 2 days ago, added another position yesterday on the roll up, took out all of the turbo and all except 1 position here yesterday. Today it started to sell. So this is getting all flat on all of that for a big win. Now I'm in the 0 state, and today it finds support here, gives me a 1, 2, 3 exit. I love McDonald's, so this is me putting the initial position of 1 standard unit of risk back on, and it closes well, and we're at +1 prior to Fed day. And all it has to do is break above 299, and off we go. I'll be back on it. I feel like we got through that one pretty well. Merck, so this was the other real strong relative strength that we had early belief and had been just riding that train. And today it worked after this little bit. Added the 3rd position, so we're holding 3, 4, 5, 6, 7. 7 on this one, 4 on this one, and 1 on this one. So we're at about +12 on 3 positions. So we are like net 4 on all 3. So I've got a 4R buffer on all of those. So even if I had to give back 2 each on there, I'm still going to come out of this with 6. So that felt like it was worth holding 1 more day and adding a position. Marijuana, no trade. GG asks, why not keep the positions on and tighten the stop? Because then I have 3 long positions and I'm facing a gap. And the tight positions work just fine intraday, but the gaps tend to be 5 to 10 times larger than the intraday position. So the intraday position, I can justify a nice tight risk because it's a live continuous trading signal. But then when it closes here, and then I have 16 hours of news, the size of the gap is so large that if I kept 6 positions on, all of the money that I made intraday gets murdered in an overnight gap when I have no way to trade it. Now, a good point about TharpThink, about, hey, don't cut your winners. Here's how I interpret that. And Van and I went back and forth on that for 20 years, and I maintain my position that I look at the average win and the average loss. When I look at my histogram, I look at 3 things. There's the 0 line. There is the red line that represents -1. I'm looking for 0 losses greater than 1R. I'm looking at the distance between -1 and +2 as the routine operations. Like, I'm always aiming for 2R. So I'm just going to consider all of the trades between -1 and +2. And I want that to be positive expectancy. And I want my average win to be bigger than my average loss. If that's true, then I'm actually letting the winners run and cutting the losers. And then the third thing I look at is wins greater than 2R, and those are the ones that are awesome. And that's letting the big winners run, and that's where scaling in when the market is moving in my direction, I'm getting these little extra 2 and 3 and 4 and 5 Rs and 0 overnight risk, except in 1 out of 10 cases when I decide to take that risk, which is what I did with McDonald's last week and what I did with Merck tonight and in a couple cases. But you'll see me 2 out of 3 times easily just taking the winning trades and cutting them and getting back on when I have the edge, which is on the intraday. So if I go back and look at McDonald's, look at where I exited this 5. This was everything out except 1 position, and that one didn't stick around. So I could have had 10 positions on here, and then the gap down as a -1, that would be -10R on something I have absolutely no manageability on. And then I'm trying to get out of 10 positions while that thing is cratering. There's nothing that tells me I'm going to get a good fill. So I just take it a bird in the hand. We're early in a young bull. We got a Fed announcement tomorrow. I got no reason to take the overnight risk. When I can routinely get these kinds of trades intraday with no overnight risk, why would I take a risk that I don't have to? If you look at all the day trades that we've been doing, 0 trades with greater than 1R loss, except for that idiot move I made in ETHE where I just failed to manage the position because I was flipping through the charts and I skipped over it and I missed it. So that's just attention to detail, and I was at -3 on that and never should have been. Now, on the day trades, I never take losses bigger than 1R. My average loss is about 0.3 or 0.4 on a given day. And my average win is about 0.7. So my average win is 2 times bigger than my average loss. I define that as routinely letting my winners run, but I also know what the average winner of my style of trading is. So if I get an above average winner and it starts coming back, I never let it go below the average win. So I'm always slightly increasing my average win. And then when I look at the histogram again, step 1, nothing worse than 1R, positive expectancy from -1 to +2, and then the possibility of large R multiples. That is my definition, my implementation of TharpThink about let your winners run. There's absolutely no reason to let a trade run because of a generic advice to let your winners run when there's nothing in the trade hypothesis that suggests that you have a favorable reward to risk ratio. None. The only reason I'm holding this in McDonald's is because this was the strongest stock in the S&P 500, which held support higher than the last two measured support levels, and it was showing strong buying pressure, and was closing right near the previous all-time high, and it is no stretch of the imagination to say it could very easily go strong. When people need a place to put their cash, there's no better place to put it than McDonald's right now, which has a 2% dividend. And every fund manager in the world, every pension fund manager in the world has to park a lot of money in great big large cap companies, and there's nothing more reliable right now than McDonald's and the American propensity to eat below average cheeseburgers. So that's my short answer to Van's basic principle of you've got to let your winners run. So the research question is, how do you know that you are letting your winners run? I'm going to jump ahead and look at, this is work in progress from Luke, and let's see, I'm going to just show you that one right now, since we're on this subject. So he was doing his coaching debriefing here, and these are the last 300 trades, the last 332 trades that he has traded. This is his performance prior to implementing a tightening up. On those 332 trades, his best win was 10R. His worst, he had one trade that was minus 1.09, so it was just slightly bigger. That was one trade out of 332 where he had a loss greater than 1R. He had a lot of losses between minus 0.5 and minus 1, had some between 0 and minus 0.5. 89% of his trades were between minus 1 and plus 2, and this was positive expectancy. Check. So nothing worse than minus 1? Check, pretty much. Positive expectancy between minus 1 and plus 2? Check. And then 11% of his trades, the fat right tail, were ones that just exploded and were good. So here's what his statistics are for those 332 trades. 156 wins, 7 scratches, which was 2%, and then 169 losses. His expectancy is 0.4 overall. His win rate is 47%. His loss rate is 51%. That's basically a coin flip. And his average win was 1.5. And his average loss was minus 0.6. That's 2.5 to 1. How would you like to have a coin flip where you win 2.5 but you lose 1? How many times a day do you want to trade that system? All day. How many of those trades do you want to take? All of them. Forever. What if you could do that with no overnight risk? Yeah, you would trade that forever. So we weren't satisfied with that performance, even though the SQN is 4.6, and if you just take the one based on 100, it's a 2.5, and the signal to noise ratio, expectancy divided by standard deviation, is a favorable 0.25. That's a pretty good system. So now he implemented some analysis. So this was the coaching that we did in the hour before this meeting. See if I can find it. Oh, it crashed. What he did was, what if he just decided to, instead of sticking around and believing in the trade, just take the loss at minus 0.6. Just take the loss. And then never let an above average win go below average win. His numbers were still about 89% were between -1 and +2, but he increased his expectancy by 10% to 0.44 from 0.4. Do you want a 10% improvement on a performance of a system that looks like that? Yes, you do. 11% were still out here, but now his SQN improved to 5.1, his NSQN to 2.8, his signal to noise ratio improved. He still has a coin flip, but now it pays 3 to 1 instead of 2.5 to 1. That's an improvement of 20%. Simply by tightening up the rules and not allowing leakers. That's cutting the losses early and still letting his winning trades run. That's what statistical process control will do for you. That's what attention to detail will do for you. That's what descriptive statistics and coaching will do for you. That's what abiding by standard rules that allows you to look at your trading performance in aggregate over a 3-month period. That's 100 trades a month. That's 10 trades a week. No, I'm sorry, that's 25 trades a week. That's 5 trades a day, every day. And so sometimes you lose sight of what's going on until you look at these things in aggregate. That's why we study our numbers this way. So that's how we apply Van's general guidance of let your winners run and don't cut your losers short. You have to have a set of rules, and then you look at the performance of those rules in a large data set. And then you say, one at a time, what if I change this one idea and now I go to R prime? What is the results? And then let me compare these on the basis of statistics to decide if this one single rule improvement is worthwhile. So you're controlling for everything except one factor. And then you examine the factors to see which rule change gives you the best aggregate performance improvement over large numbers. That's how we trade with statistical process control. Check or hold. I couldn't have done that better if I'd paid you to ask that question. So thank you for asking a good question. Meanwhile, back in the jungle. If you remember the song by the New York Dolls back in the day. All right, where are we at here? All right, so that's McDonald's. And let's see, I think we got to, marijuana, no trade, clean energy. This is in a Godzilla. And so that is a compound critical state. And yesterday, it started to fail, so we got short and it closed poorly. I held that position overnight. As soon as it gapped down, it's free and clear, so second position. And now this thing gets through here and starting to roll over. That's when I decide, you know what? I'm going to use the buffer of 1, 2, 3R and try to hold on for one more, with the belief that that is in a Godzilla and has a propensity to get slaughtered tomorrow when people just give up. What's that look like on a daily chart? It looks horrible. That's as bad as you could ever want. What's it look like on a 3-day chart? Worse. What's it look like on a 9-day chart? Miserable. This thing could still go all the way back to here, which is 25. It's at 34 right now. A move to 25 is minus 9. That's another 25% downward move before it hits the previous support level. How long have we been trading this thing short? From here. Waiting to see our moments of advantage at PSAR flips. So compound critical states tell you when you have a statistical reason to believe in a large move in your direction with favorable reward to risk and manageable risk. Rivian, no trade. The S&P. So you just go back and listen to yesterday. This was such a nice move off the bottom. And then yesterday I said, you know what? That thing is at the end of a run. And it hit the PSAR flip yesterday. So I just said, if you were in that trade, you should cash it. And then it gapped down to here. And then you could get short on the gap down and fail. And then just collect a 1, 2, 3 exit right there. And collect 3R. And now you could decide if on the day before the Fed you want to take that long. I don't. Because I know how to get in tomorrow. I'll just put a nice tight risk box on that. And if it breaks north of that, I can trade that until an hour before the Fed. And if it breaks below here, I can trade that an hour before the Fed and stay within today's yellow zone. Be flat before the Fed, and then just wait for the day after tomorrow. Who's in a hurry? This thing moves like this on non-Fed days. Why am I going to try to trade inside the Fed noise? No reason to. Treasuries. Yesterday, you heard me say, hey, there's a nice short finally. And it closed 1, 2, 3, 4. And I took that exit yesterday holding 4. Well, Ken, isn't that a winner that you want to let it run? Yeah, but then it gapped up to here, and 2 of those 4 would have been given back. So I'd given back half of the money that I earned yesterday on a decision where I have no chance to take an incremental, manageable exit. I don't have an edge on that. That's a coin flip. You better have a darn good reason to justify holding risk overnight. And if you do, it should be based on the size of the gap. Look at the size of the gaps on treasuries. Why is that the case? Oh, because the futures trade all night. And so they're trading that thing, and wherever they leave it off is where it gaps to. I don't want to be subject to that. To that low volume manic depressive trading. I don't hold treasuries overnight. That's not the risk-free rate of return. When it moves like this intraday, that's manageable risk. Gaps, unmanageable risk. You better have a really good reason to take an unmanaged risk. Tesla, no trade. It was available, just no will. U.S. Steel initiated the long after a gap down, harsh sell, and then held. And then proceeded in an orderly manner all the way through the dragon. Hit the PSAR early in the day. Buy it with holding my nose, tight stop. That's holding +2, and it just went into the spring. And all it's got to do is get through 23, and then it's off and running. That's the reason for me to hold that trade. I should have a tip jar. Sniper trade of the day. So now intraday, 3-minute chart on some symbol. This is where it closed yesterday after a little PSAR flip. And here's the opening range 3. So just by default, I'm ready to go long or short just because. I'll just call that the yellow zone, and I'll trade outside as soon as it breaks out of the yellow zone. I don't care which direction it goes. Nothing, 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 something. Standard risk. By this time, I should have no risk left in that position. My stop is here. By the time it moves to here, on the third bar, as it's starting to move up, my stop ought to be like right here. So that with my entry here, I now have the worst case scenario is if it comes down and hits that wedge, and that's about 0.25 R. Would you agree? So I risk $400 per trade. If I make, and that's equal to 1 R. So if I make 0.25, that equals plus $100. I can take my wife to dinner, leave a nice tip, pay for gas, and buy popcorn at the soccer match. Standard exit, check or hold. That's about 0.75. Would you agree? If that's 0.25, there's 0.25. That's about 0.7. That is a perfectly average trade. Hey, what if I bought this here and it started failing? Would you be surprised if I got out of that thing right here? You shouldn't be, because that lets me achieve a minus 0.5 loss. So frame it with a 1R loss. As soon as I buy it, I feel all of the angst and despair of losing a full 1R. And then if I only take a 0.5R, I feel like I made 0.5 because I didn't actually lose an entire minus 1. That's monkey psychology. And then if I get my average trade, 0.75, I'm happier than a dead pig in the sun, and I got well started. Now look at where that exit occurs. It went in the summer. As it comes through the dragon, there's the fall. And now it's entering the Red River. No reason to be in that trade. All day. What would you call that entry? Kata 2. If I wait for it to get above this and like enter up in here, that would be an emerging dragon. But this, because it's below that statistical level, that makes it a Kata 2, because I have higher lows, successful trade, cross the river, cross the dragon, and takes out the PSAR flip. That's the standardest of standard entries of all time. There he is. There's our boy. Holding at the PSAR, that's good. Starting to climb, that's good. Cross the PSAR, that's an exit. 0.75, 0.75. That's 2 average trades. We're plus 1.5. What would you call that entry? Caught a 2. Successful trade. Crossed below the dragon, held. Crossed above the dragon, PSAR flip. There's our boy. Trying hard. Look, you can feel it trying. To our battle drill-ish. Close enough for jazz. If that gets you out, I agree. As long as this gets you back in. Or adding a third position. Lucky. And then because I was lucky and I got 3 positions on, now there's no slack. 1, 2, 2.5. 1.5. 1/2. 4.5. We were net 1.5 from before. Good job, K2. Those of you who are fans of Doctor Who will recognize K9. And that's it for the day. Standard work. 6R. OR3 breakout. 2 average trades. 1 pretty good trade. 6R. Ethereum was already in a compound critical state. Made it a great opportunity to trade. Excellent self-coaching from Tim. Busy in his day job, limited focus. Good lesson to accept any circumstances just as they are. Be mindful to just focus on the next trade. Don't worry about missed opportunities because the market doesn't remember what you didn't do. Gets a nice trade. Looked at a possible entry here on a PSAR flip that broke the VWAP. That's where I like to enter. But he gets this one. Crushes it. Tries it. Gets out with a half an hour loss. 1.7 for the day. Agnieszka. Tries the PSAR flip break. I think you should be getting out here where it crosses back across the dragon instead of here. Then you could enter here instead of here. And then, but she makes 0.9, loses 0.9, so that's a scratch. I'd like to see you come out of there with about a 0.4. And then I'd like to see you short here when this rolls over sharply, crosses through the dragon is rolling over, either there or here. This one is well below the threshold for a collapsing dragon, but is still 1 point, but she crushes the exit, and 1.5 for the day. You don't even have to be perfect. You just have to be pretty good. Much better from Hamad. Fewer charts, more attention to detail. Perfect collapsing dragon. So this is labeled as a pocket. I really can, if you were in here, pocket, yes, but really, I draw that line across. I would treat that as a collapsing dragon, but it's so close it might as well be. Now note the R10 wiggle. Here was an opportunity. He nails it here. R10 wiggle, starts to fail, nails it. Quick exit, long, quick cut. Caught it to long, quick cut. Opportunity here. Rolls over. I like the short, I like the quick cut, and gets paid a little bit. Really nice day. Much larger wins compared to losses. Great exit management. Q, the same trade. Only 1.8 on the Qs because the moves are bigger. And it's essentially the same. He doesn't stay wrong too long, and he gets the re-entry. Key to sanity. Could have added here and here, but nails this thing for huge wins. Huge win. These kind of neutralize and scratch out. Peter D. 22.5 R. Well, let's see. Here's the sideways shelf. It opens here, collapses, gets the short and cover, short and micro loss, scratch, micro loss, keep firing, re-entry, collapsing dragon, crush on two positions, crush, scratch, crush, big crush. Adding a position size equal to 50% of the current position. That's one way to do it. You know, what I like, my own personal preferences, I like to always have standard chip size. So it's always, if it's 100 shares, then it's always 100 shares and equal dollars and whatever. If you have one and then we're adding and it was going to be half, you'd then be at 1.5, and then if you added a third position, it's 0.75. Now I got to figure out what 2.25 of a risk box at times of math is equal to number of shares. I like standardized shares so I can just throw chips on it, but your call. I'm not going to argue with 22R, other than to say, you know, check your math. 2.9 on Brazil. Orderly. Tries the second one. It doesn't work right away, so he covers. This is where you can instantly get short again, because that R10 barely wiggled and then failed. Same thing, I would probably get short back in here and try to scratch. Scratch, short. Here's a PSR flipped it alongside. But almost 3R, total 25. That's a pretty good month at work today. DIA. So this one is Brian. $3R today. His running total of trades for the first 30 trades is 13.3. So his expectancy is 0.3. Nice. Here's, yeah, oh, that's the one. Beautiful. Beautiful re-entry. Here's where that re-entry, yep, correct. That's what good self-coaching looks like. He does get short here. So he left about an R on the table. Good exit. I like the effort on the long side because it had that long to fail and it didn't. But it's trying to go long. Quick exit. I like this one. I think you stayed too long. But that's pretty good shooting, Tex. Notice that the easier moves are early when people are finding the new price level. Inside the chop, it gets a little hard. I want you to notice, you're trying to get short in a rising spring, whereas all your shorts here are during winters. You have those indicators. Let's use them. Woj just continues to crush on his standard 4 symbols. He picks Devon Energy, Tesla for tech. So harsh sell-off, recovery, gets long, suffers it all the way back to here for 1.4, but he gave back 1.5. I'd like to see you get out here earlier before you take that spike and then gain it back and then get spiked again. -1 here in the scratch. Oh, man. We wants that. So that was from yesterday. NVIDIA, or US Steel, quick scratch. NVIDIA today, 4R, OR3. They go to the whip hand, crushes it. On this little wiggle, somewhere in here there's a second R after a 2R battle drill. Caught a 2, caught a 2, caught a 2, caught a 2. Rising VWAP. Devon Energy, smash. Hulk smash. Big gap down. That tells you something. OR3, crush, 5.5. Yeah, I'd be focusing on other symbols too. And that's just on one position. That should have been could have been 8. Not should, could. US Steel, beauty. Oh, man. OR3, tries long, stop and reverse, Hulk smash. Caught a 2, caught a 2, caught a 2, the grind. NVIDIA, smash, caught a 2s all the way up. Sum of all symbols today, 12. Hey, I need to get a histogram of your last 500 or 1,000 trades. We need to start taking a look at the longer term trend lines. My brother. Just doing some work. He was processing some video lessons. They're in Campfire. Campfire, not Basecamp. A 1-minute lesson. Nice work. the usual plus an exit, the usual reentries plus an exit, the usual reentry plus an exit, 8.3R while doing other things. It's almost like the other things are a soundtrack to keep your monkey busy. And then that's the work from Luke. I'm going to post his debriefing of this entire process and then the coaching session I gave him earlier tonight, just as a way to look at routine quarterly coaching on large data sets of systems that are being traded at production level by an accountant, business owner, father of 7. You don't get much more serious than that, except he lives in Australia, so you got to question a little bit of his judgment in public anyway. Okay, that's irony. Sometimes you got to tell people. Reports. This was a bit of a problem. So we had this, Kata 2 into a doji, and then big collapse. Slight recovery, but still not helpful. This is becoming a Kata 2 to the downside. So you've got to honor this stop right here at 408. That's where we had the stop yesterday, and it came down and rested right on it, and then recovered back to here. It sold off hard right to the support level, and it held. So there's still a fighting chance that goes tomorrow. But if that cracks, it's like the sound of a frozen lake in the springtime, that it's just all done. Bull quiet, slight weakening, still risk on. Conservative staples making money. Tech is a little weak right now. Intel. Energy's weak. ExxonMobil. Lots of auto framers now because of the pullback from the 10-day high. But big wins here in Merck. That's why I'm holding that as the overnight risk on the swing, because of its trade location. That is materially different than the rest of the Dow and its peer group. That's people buying and holding and pushing Merck up. That's a special case right there. ETFs, handful of auto framers. Gold and treasuries were the winners today. Energy was the loser. And the big loser, the Godzilla Clean Energy PBW. XLE Energy. Oil USO. It's all there to be seen. Standard work on the auto framers and the daily squeezes. Today was a large range day. No symbols were squeezed. Increase in the number of Godzillas. We got one, LDOS, which was a 9.5 sigma move. I wonder what that looks like. Let's go to the S&P. This is why you might be interested in TC 2000 bundle. LDOS. You get all these standard screens if you get that. It's down 14% today. Look at that move. Holy smokes. Orderly, probably earnings collapse. Broke to here and then sold off from 89, another 10% to 80, and stabilized here but closed poorly. If that fails below here, guess what? Smash. Hulk smash. The tactical symbol set, we've got two new Godzillas, Clean Energy, and Alcoa. Quiet ones, to be sure. But a quiet Godzilla is one trigger away from an enraged Godzilla. And you don't want to be on the wrong end of that. Lots of double green volatilities today. TC2000 auto framer. Let's just look at the stats, see who the winners and losers were today. So I ranked this one by percent change today. Ethereum, precious metals, Bitcoin, treasuries, Coinbase, silver, all defensive and currency plays. Cliff, the metals were big, but U.S. Steel and Alcoa got smashed. All of the semis were weak. Texas Instruments, Intel, and NVIDIA were well below the S&P and were below the tech index. So semiconductors especially weak. And Devon Energy, like the entire energy sector, got smashed. Oil, Devon Energy, ExxonMobil. What else do you need to know? Fall is dominating. Red galore. What are the non-cooperative ones? Here you go. Merck, Johnson & Johnson, and McDonald's. Gold, treasuries, and precious little else. That's not promising. Trading value of our little combination of large average range and consistency in the frog quality number. Tesla, marijuana, clean energy, NVIDIA, Devon, Intel. That's what Microsoft, yay. Mexico, look at that frog quality. That is so consistently 1.5% moving every day. Man, you got to pay attention to that. Mexico. All right, guys, that's everything. A longer one than usual. We'll get this published and posted and catch you tomorrow. Listen for the special I do on Luke's coaching. It was really well done. Ciao for now.